Good morning. It's Tuesday, January 28th, about 5:45 a.m. Central Time. So overnight, the precious metals, they are recovering after yesterday's contagion-type sell-off, following the news that Chinese AI Deepseek is disrupting the U.S. equity markets, the semiconductor index, and broadening out that weakness into the precious metal space. To give you a quick recap of what happened, there was news out of China that a cheaper, faster AI that uses less semiconductor power was released and had disrupted the market. The S&P 500, the NASDAQ, and NVIDIA were all hammered on the news. The news that companies have to rethink their AI strategy, meaning that the revenue sharing and taking down the valuation of NVIDIA had really spread out on these markets. Remember that many of these companies are building data centers to support their AI, which takes a lot of power, takes a lot of precious metals, takes a lot of resources in order to build. So how are the metals impacted? This is just a thought that I had because we had that sell-off in copper, in silver, in gold, in platinum, palladium, everything yesterday. It could be a possible decrease in the demand for copper and silver as the metals are under a constant need for these advanced chips. One of the quotes that I often give to the news is that AI applications require energy-intense computing, and you expect that to increase copper demand. The demand increase is expected to be 3.4 million tons per year. So if you need, or if you can use less advanced chips and you don't need this constant need for building and building and building these AI centers, you could see copper demand come off. And I think that yesterday, we saw a small recalibration of the trade just for a brief moment. Now, I'm not saying that copper demand and silver demand and everything else demand is gone forever. I'm just saying that this was a quick, like how the valuation of NVIDIA had to reset yesterday. The valuation of things like copper and silver had to reset for the brief moment, and that's why we had a dollar sell-off in the market. Now, we are seeing a recovery in the overnight action here. So that's kind of the recap of what went on yesterday. So now we can look at the overnight price action and precious metals and the setup for the day. So gold prices, they are steady and they are snapping back from that sharp loss. They're up about $10 in the overnight session. Still quoting the February contract, 27.48. Might have some small resistance right around 27.50. Low of the overnight session, 27.37. Now there's a lot of talk that gold may get a boost from the potential rate cuts from the months ahead, and then the increased safe haven demand from Trump's policies. We saw Trump weaponize tariffs against Colombia over the weekend. Had nothing to really do with the products that are imported and exported. This was part of his policy and agenda of the demigration that we've seen, and Colombia rejected 2 cargoes of planes. He slapped tariffs on there. The tariffs were resolved, and everything was hunky-dory by Monday morning. So he is using these to weaponize it. So you might see some safe haven buying in the gold market. Pushing on to silver. Silver's up about 14 cents here, sitting at about 30.55. Support 30.23. That was the low of the overnight session. 30.63, the high of the overnight session. 30.50, this kind of range down to the 30.30 has been pocket support recently. $30 and about a nickel has been your critical support. A break below that, we may see another sell-off, and I'll get into that data in a second. Now, checking on the gold-silver ratio, I believe is still too high at about 90-1. I'm sure at one point yesterday it was about 90.5, maybe even 91-1 when silver was down about $1 an ounce. Looking at the copper market and your industrials, copper did edge lower after President Trump said he planned to impose import tariffs on the metal, as well as aluminum, as well as steel, and it raises the fears that the trade wars are really starting to begin. We saw the dollar index rise on that, and I've been discussing with a lot of clients how I believe that the dollar index is going to rise again, that inflation is going to pick up. So many people that are long the precious metals are also short things like the euro currency, which is down over 0.5% today. Remember, when you go over to Europe, Their economy is weakening. Their inflation data is weakening. Their central banks need to cut rates, and it's a very bad and poor environment for firming up a foreign currency, and that's where the disconnect comes between the dollar index rallying and the euro currency weakening. Now, Trump, he also made pledges in his speech that he threatened levies on computer chips, pharmaceuticals, and it's an attempt to boost manufacturing domestically. So if you get domestic manufacturing pickup, yes, you could see copper futures recover. Yes, you could see silver and everything else, everything from energies all picking back up. That's why the sell-off yesterday was most likely just kind of a one-off day, although it was a very large, alarming, and aggressive type of sell-off. Now, Canada is most likely going to be hit by the metal tariff because they are a major supplier to the U.S. from aluminum, copper, and steel into the U.S. We are seeing platinum futures not really going anywhere, right around the 963.5, up about $3. So if you like the things that I'm discussing here, you like to get some positions going on in many of these markets. Remember, there's a 10-ounce gold contract. Easy way to get into the market. There's even a 1-ounce gold contract. There's 1,000-ounce silver. There's 2,500 pounds of copper. There's very small contracts where you can gain some exposure. So if you like to open up an account with Blue Line Futures, it takes about 10 minutes to complete an online application. Just send an email at info at Blue Line Futures, and we'll send you the link to get started. Now, turning to the energy markets, we do have a recovery going on in the crude oil market. Crude oil futures had peaked right around that $80 a barrel. And remember Trump's initiative, drill, baby, drill. But oil prices, they recovered after that 2% drop on Monday. There's concerns over Libyan supplies and President Trump's desire to implement universal trade war tariffs. So that was something else that Scott Bessick is saying, is that a 2.5% kind of universal tariff might come into play. So there was a protest in Libya that may halt crude loadings at two major ports, and it's affecting hundreds of thousands of barrels for exports. So that's the reason why you're seeing crude oil futures rally a bit. Oil traders are expecting OPEC and its allies to stick with the current kind of supply policy, resisting pressure from Trump to bring down those prices here. So shifting to the 10-year note, we do have 10-year futures here. We're seeing the yields up just a slight bit, the futures just a slight bit lower. This comes as the dollar index is stronger. And then you get over to the U.S. equity markets. They are bouncing back. Traders are really going to focus on Microsoft and Apple, those earnings announcements this week. Profit growth for these large technology companies is expected to come in at the slowest pace in almost 2 years. Looking at the crypto space, we do have cryptocurrencies recovering. Bitcoin up about $1,400 at just under 103,000, and then you do have Ethereum up about $42. A lot of the agricultural markets, they all rallying here a bit here this morning. Natural gas still under just a touch of pressure. Now looking at the CME's Fed Watch tool, some of the data that's coming out today. Again, we do have a Fed meeting tomorrow. No expectations for an interest rate cut. You go out to March, about a 30% chance of a cut. Yesterday, it was about 33% chance, and it was because of the sell-off here. You go about a week ago, it was only a 25% chance that they cut rates. You get out to May and you get out to June, those numbers increase on probabilities. Now, this is also Tuesday where the economic data starts to pick up here from here throughout the rest of the week. You do have core durable goods, the month-over-month orders. You do have durable goods, month-over-month. Those are all both expected to edge just a little bit higher. You see those durable goods orders pick up. A lot of times copper futures and silver futures will rally with that. You're going to see consumer confidence expected to come out 105.7. Last month's was 104.7. So a little bit of an increase there. Now the Richmond Manufacturing Index is expected to come down a bit. Looking at the technicals on the silver market here, you do have some critical levels here. And I told you, if a lot of you guys know me, I'm a guy who, when I finish work, I print off the charts, I print off the research. I go sit somewhere kind of in isolation, maybe a Starbucks, maybe a Barnes & Noble, something like that. And I kind of analyze these things, and it gets you away from the computer and a lot of the distractions, shut the phone off and everything else. So your critical level support, and I believe really your pivot point on the silver market to the upside is about 30.96. That's the 50-day moving average. You close above that, chances are you're going to try and make another run. You want to fill that previous day's candle there, that Friday candle, and get above 31.88. That's the line in the sand to the upside. You get above 38 on a closing basis on strong volume, chances are you're going to retest 32.50 to 33. Now on the downside, we came down to a very big line yesterday, which is about 29.94. Now, we didn't get down that low, but we surely did approach that level there. You break below 29.94, well, you got that double bottom on the chart. You got the double bottom. It's from December 19th to December 31st. It's right around 29.25. You look at stochastics, they are correcting, so we're losing some momentum. The DMI minus is over DMI plus, which is a negative sign. The average true range, 79 cents. Not the highest that we've seen, but silver does its best when it's trending upwards. The average true range is about 50 to 60 cents, and then you get a breakout over a level, and you'll get the surge in the average true range up to about 88 cents. The MACD is still positive, but barely in positive territory, meaning that a lot of platforms, the way people trade their technical system is that if the MACD is positive, they will only take buy signals. The way the buy signal is triggered is that silver would need to take out the previous day's high. Then it automatically clicks in. They trail a stop. They'll risk like $500 to try and make 15 on a contract, and they'll trail the stops behind there. Now the gold market, it has this rising pattern that's been going on since those lows there right around December 31st or so, when we were just over $2,600. That's your critical level of support. We've seen a double bottom, and if not a triple bottom, at about $2,600 recently. Your critical support level is going to be about 27.14. You get below that 2,700. 50-day moving average, 26.76. You don't want to see a break below that level. Chances are we'll retest the 2,600. Now, it's the contract highs that we've seen just in the last 48 hours of 27.78. You break above there, chances are you're going to try and test that all-time high. So that's something we're going to want to monitor. Remember, there's a lot of things coming out this week, and that could be a little bit problematic for some of these markets or opportunistic for others. So what you want to watch and follow throughout the rest of the day is whether or not this bounce can hold, not only in the U.S. equities, but the precious metals markets, or is it going to fade off as the day progresses on? And I think that is really going to determine the setup here for tomorrow. You got any questions? A little bit longer video. Yesterday was kind of like sheer panic and chaos. My phone blowing up every 8 seconds with this sell-off and this Deepseek here, and what my thoughts are on it, and a lot of repositioning in the market. So you got any questions, reach out to us, 312-858-7303. Remember, futures and option trading, it does involve risk of loss, may not be suitable to all investors. Good luck, good trading.